Okay, today I want to go through my NFP trade, which I entered on the 8th of January 2010 and exited on the 11th of January 2010. Okay, starting off as per usual, we're starting on the daily chart. This is the Euro USD, and you can see the markets moved aggressively down just before the new year. Now we've entered in the new year. The new year's breaks over and the traders have returned. You can see that the market's found a nice, decent support level around 142.77. Around that sort of region there, you can see that Fibonacci study, which is 61.8 retracement level from the monthly chart. You can see that the markets really failed to close below this after the New Year period. So we're expecting a strong area of support around that region there. This is the candle from an NFP, this long green one here. This is Sunday close, and this is today's candle. So basically, how can we identify, what's going to happen here, a trade plan for NFP, and how about, how we'd go about trading it basically. Okay, so we start off. We'll go into the 4-hourly chart now. You can see that if the market does come down this region here, we're going to experience buying. So we'll use that to advantage, as we know that this is going to happen around this 61.8 retracement level here. Okay, so if we go down to the 4-hour chart, we can get a better idea about what's going on. And you can see there's a rising price channel which we've been in now since the 22nd of December. So price has been bouncing between this rising support line. As you can see, this blue line here, it's touched it here, 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 and here. Before drawing this in, I like it to touch at least 4 times. As you can see, it's touched it once here, 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 and here. So that's about 5 times now. Also, you can put in a guide. Resistance, rising resistance line, as you can see there. So price is really bouncing between these two lines as it sort of trends higher. This is a 4th wave retracement. So if you follow Elliott wave, this is the 4th wave from this long 3rd wave down, as you can see here. So aggressive move down here is 3rd wave. This is the 4th wave, almost in a rising wedge form, a retracement back up onto the 3rd wave. Okay, so this is this rising support line, as I said before, as we've seen on the daily as well. So we're going to experience a high amount of buying, extremely, an aggressive support line really, as it's rising up. Okay, so how do we go about trading the news and getting a good entry of this, and understand what the news means, and also understand how we can trade this in a conservatable, repeatable way. Okay, so what we need to do is, for the news, we need to go down to the 5-minute chart, as you can see here. Now, there's a couple of ways you could trade this. It depends on the figure, and it depends on the release, really. You can see I've Fibonacci studied the actual kind of wave of the news release, and this is the news candle, as you can see here. So at 1:30 on the 8th, the news was released, which was NFP. It was a lot worse than expected for the United States economy. Down 85,000, predicted in at 3,000. From all the economists across the world, they obviously predict different levels of job increases or decreases. The consensus was it was around about minus 3,000 jobs last month in December were lost. However, it was a lot worse than expected, which was 85,000. Okay, so obviously that's going to send the euro up and the dollar down, which is exactly what's happened here. Now you've got 2 choices here really. You can either use a 5-bar news break rule. So you can either set a trap for this. What I mean by that is, you can see once this news has been released, you can see here on this 5-minute candle, you can draw some lines in the sand, as I've done previously, at the top and bottom of the candle. So you can see that red line there, and put the red line and the red line down here. You can see I've already got it here. So basically you just trade a break of that. As soon as it trades up higher on this, so once this 5-minute candle's closed, you then wait to see the next 5-minute candle, the next one, or the next one. So it actually broke it here, which was the second candle. 10 minutes later, it actually broke that line. Now you can trade that break, and then you just use the 3-bar rule to chase price action, which would have brought you out here. So 1, 2, 3. So what I mean by the 3-bar rule is the low breaks the last 3 bars. so you can use that as an exit strategy. Also, or failing that, you could do what I did, which is basically we weren't sure this was going to come back, but you would get some sort of retest from this strong upward move here. From this up move here, you would get some sort of retest, which is exactly why I did this Fibonacci study. So once the wave's complete, put your Fibonacci study in. Now, I didn't expect the retracement wave to come down exactly as far as it did, down to the 76.8. It should really come down to the 61.8, which is exactly where exactly where I bought it. So my entry was around 143.30 is where I bought it. From these highs over here, you can see. So 130, which was this region right here. So you can see if I come back here, this 5-minute chart here, you can see there's these two highs around this region here. So that's exactly where we're looking to see the market to come back to and to really find support. I did find temporary support off there, as you can see, and it blasted through it. A close below here would have put me out. So if people who are asking me about where you should put your stops, we did this live in my webinar. We had a few problems with connections, but hopefully we got all the right information out to you guys. If a close below the 76.8 retracement line, if there was a close below that, then that really would put me out the market, and I'd exit my position. Okay, so basically there's your long there. That's where you want to be getting long, buying this market around the 30 region. You could have got a better entry, admittedly say, back down to the 76.8, as you can see there, or anywhere in this region here from 30 downwards, from 143.30 downwards. That's probably that's the support zone of where you're looking to buy this. Anywhere around there within 30 prices is a really good buy. Okay, so where's your targets? Where are you really aiming for? So you can either what you really need to do, is base your targets on the 4-hourly chart. So you've got a good entry, and now you base your targets on your 4-hourly chart. So where's this market going to? As you can see, we've bought it around the support line, which is around 43.30. So if I got the crosshair, I can explain to you guys where the target is. So where's the target? Well, it's at the top of the resistance line here. You can see it's touched it here. So if I go back, it's touched it here, 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 almost, here, and now again it's sitting on it here now. So that's exactly where you want to be exiting your trade, around that region, which is where I exited, which was 145.54, which netted me 224 pips, I think, which is pretty good for a news trade. There's lots of stuff in there, so if you guys have got any questions about Fibonacci, about rising price channels, wedges, about how to trade the 5-bar break and also the 3-bar rule, then give me an email or send me a message on the forum, and hopefully we can get back to you. If you're interested in trading news or kind of going a bit more one-to-one tuition, then just give me an email and we can see what we can work out. Okay, cheers.